Hello everyone and welcome into the channel where we talk about the stock market, dividends, real estate, entrepreneurship, and personal finance. Now in this video, we are going to be going over the M1 Finance dividend portfolio. Last week, we sold over $20,000 of our individual holdings and moved it into a single ETF, which we're going to be using to invest going forward, along with about 10 individual holdings. So we didn't sell off our entire portfolio, but we did sell off nearly half of our holdings in there and kind of thinned it down. So in this video, we're going to be hitting up a few different areas. Number one, we're going to be taking a look at the overall performance of this portfolio since inception. Number two, we're going to be taking a look at the weekly performance in comparison to the main indexes. So how did we do? Did we overperform, underperform, come right in line with the S&P 500 and the other indexes? Three, we're going to be taking a look at the activity. Now, we did sell off 11 holdings last week, and we moved it all into one ETF. So we're going to be discussing and taking a look at how many shares of SCHD we picked up, some of the options that we're missing out, by using the M1 Finance platform. And then number four, we're going to be taking a look at the updated dividend income, because moving out of those individual holdings, their average yield was lower than the average yield of SCHD. By moving all those holdings out of our portfolio and including SCHD in there, it's going to bump up our yearly dividend income for the M1 Finance portfolio. So we are on our fifth week of green, just straight green, right? 1, 2, 3, 4, and then we have that new week this week. So it's essentially 5 weeks of green right now. Jumping over, we're taking a look at greed is the main factor in the market, and I honestly don't have anything against it right now. Earnings have been mostly positive outside of financials. Financials kind of brought down the overall earnings right now, earnings news. If you took a look at the general earnings, it looks kind of negative, but if you just take away financials, it actually looks very positive as far as earnings are going. The market itself, the S&P 500, along with others that kind of move within the same, have been actually very positive. If we go ahead and remove that yield, we can see here, as of about back in March 28th, going forward, the market has done nothing but go up. So just 5 weeks of mostly green, 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 green. Our support right now looks to be about 406, 408. You can see here in the past, it came down, hit that 408, 406, and kind of held it, tried to break through that resistance at those recent highs in February, but deteriorated and fell down to about 380s. Here it is again, picking it back up, chugging very quickly up to the upside. Took a little bit of a break, hit 406, 408, did it again, kind of that double tip, and then proceeded moving higher. So right now, I feel like if we did fall below 406, 408, it would still use that 50-day ES support at 402. So going forward, it just looks very positive in the market unless something unexpected hits the market. But that is where we're sitting at right now. In the general direction, right? In the general area. So our portfolio right now, as it stands at number one, the overall performance, we're up 52.43%. This is market gains of $5,854.54. Our earned dividends is not quite at that $5,500 mark. We are just $9.81 away, no, 71 cents away right there. So we are so close to hitting $4,500, but it'll probably be about another year or so until we hit earned dividends of $6,000. Earned dividends of $6,000 is my goal at the moment, because then I can say that we have essentially earned a year's worth of Roth IRA contributions as dividends within the Roth IRA account. So this account only has a cap of $6,500 right now in 2023, but in the past it had been $6,000. So essentially, we have created a whole additional year of cash all within the account through the lifetime of the portfolio. So that's just really exciting to see, and really nice to see. Our best three performers right now: Apple, AbbVie, Lockheed Martin. These positions remain the top three. I believe Main Street had been up in third place last week, but has begun to kind of pull back here. Not surprising with BDC there. But Lockheed just chugging higher and higher. I think they had some earnings come out that were actually very positive for them. Down towards the bottom, our worst three performers are Innovative, Digital, and Essex. These are three positions that we did not move out of our portfolio because they had been negative by so much. Like here, this is actually down 25 or so percent because there was $2,000 invested. It's down $500. $500 of 2,000 leaves you with 1,500, which is 25% of the portfolio. So this negative 52% is actually incorrect-ish. Not totally incorrect, but it's more incorrect than correct. And then Innovative Properties Trust, this is actually fairly correct right here. 59% to the negative, down $1,121. This just really hurts to look at. I do have other holdings that are even worse than this one, but it just kind of hurts to have it. That's kind of another factor of why I moved out of individual holdings. Individual holdings within Roth IRAs are great if the companies are very, very resilient and not going to be affected by, things that could just barely be thrown at you. A lot of these positions back here were affected short term, but they were able to overcome 2020, 2021, and that stop. All business have to halt. They have to change control for wearing different protocols, and a lot of them were able to just chug on through. Starbucks did get beat up quite a bit during that time frame, but they easily made it through and recovered and are doing really good now. Up nearly 34% just from where we picked them up earlier this year. So in the future, I will probably not invest in individual REITs just because they're very risky to raising rate environments, which we went into very rapidly, all starting in the last year. So I'm going to hold those. I don't believe they'll fall anymore. Hold on. Knock on wood. But, they have more upside potential and downside potential going forward, I believe, hopefully. So let's go ahead and take a look at the weekly performance. Now, weekly wise, we earned no dividends last week. So this is all from the portfolio, right? This is all from market gains, up 0.62% or roughly $287 right there. Our best performers were Digital Realty Trust. See, just as we were discussing, those worst performers will give us our best performance going forward just because they have the most upside potential to recover. So 7.64% right there on Digital Realty Trust. Lowe's up a whopping 4.38. Realty Income 2.57. Essex 2.15. So it's pretty good performance there. Our worst performers down here, Innovative down 2.36. This one's kind of getting sloshy. Lockheed trading near these all-time highs right now, down 1.11%. Not bad at all. Schwab did pull back a bit this week, down 0.63%. I did see that movement. I did pick up some SCHD, not only in this account, right? We have $20,231 there. We also picked up about 100 shares in another account over at Fidelity, and we're using that to test because I've never done options over at Fidelity. So I sold out of VU and moved it into 100 shares of SCHD, and I started up an option. Maybe we'll do it on another video. So just a quick little telltale preview, and then we'll go into another video kind of showcasing how we've updated the Fidelity portfolio going forward. I am actually considering, we'll go into that in number 3, but potentially moving away from M1 Finance just to have more options open up available to me. And then Apple did take a little break there, down 0.12% on the week. No biggie right there. So that is the weekly performance. Now, how did we do in comparison to the main indexes? Well, S&P 500 down 0.10%. So essentially flat on the week, nothing big to perform there. Started off nice and strong, hitting about $413, I believe. Pulled back throughout the week, just day after day. It just started the day and just started the day lower. On Tuesday, had a nice gap up. And then morning of, it just started lower. Every day started lower here. It just kind of drizzled sideways on Friday. So up for the year, 7.66%. So overall, we did beat the S&P 500 this week. Dow Jones down 0.23%. Just again, same performance, just kind of open lower throughout the week. Down 0.23. Year to date, up 2% for the year. The NASDAQ here down 0.42% on the week. Year to date, this is up the best so far. All the indexes that I'm tracking here up a whopping 15.34%. And the Russell here up 0.58%. So this is actually really surprising. There are a lot of small mid-cap companies out there that are already beat up since 2020 that do have really good potential to the upside. Is just, do investors want to take the risk of moving into these smaller mid-cap regional style companies? Year to date, they are up 1.72%. So overall, with our portfolio moving up 0.62%, we beat out the main indexes, and pretty good performance there on the week. I think this came a lot with Digital Realty and Lowe's, and yeah, those just together right there, $211 between both of those positions together. This really helped drive the portfolio higher. So number 3, the activity of the week. As we said last week, we did have $20,233 of sales, and that was all moved into $20,329.10 of SCHD. So we did pick up 276 shares of SCHD. So essentially, we could be running 2 options right now using 276 shares. Each option contract has 100 shares, so we have 200 shares right there, right, in 76. So we could essentially run 2 options. If we just collected another 34, I can't do the math, 24 more shares, we could run 3 options. And options at the moment, we'll go into that more in the future as I make the next Fidelity video. But they're actually pretty good. They're on a monthly basis. They're not as good as VTI. When I did the comparison between owning 100 shares of VTI, equity-wise, right? Equity-wise, if you could own the same amount of equity between both of them and purchase, say, SCH, let me see here. Actually, I have it right here. VTI is worth, let's see here. Yeah, VTI here is worth $205. So it would take you $20,500 to have 100 shares. SCHD cost $73 right now. It would only cost you $7,316 to capture 100 shares. So you could essentially have nearly 300 shares of SCHD versus having VTI for that same nearly $21,000. So even though you'd have 300 shares of SCHD running options, each of these options for SCHD would only net you about $25 to $30 per option, whereas VTI, that one single option on VTI with that same equity of $21,000 would run you about $120, $130 of premium. So just with one contract versus 3 contracts netting you about $90. Based on the math that I did within the last week when I was doing options on VTI and SCHD. But still, premium is premium. That's just extra capital on top of your dividends, on top of your capital gains. So it's really nice in that way. So yeah, that's all we did. We didn't have any other dividends come in. We sold out of these holdings right here. So if you guys want to pause the video here, take a look at what we sold out of and what did we move into. I am going to update the portfolio, which is going to be in number 4, which we'll start right now actually. So let's go into our holdings and let's do our dividend income. So right now, this is going to be adjusted. Right now, our value is $46,676.36. If we had not touched our portfolio, we would probably be at $46,713. So we wouldn't have lost as much if we had just held off, right? Maybe? I don't know. We'll see. It's okay. So let's go ahead and update our dividend income. So let me go ahead and do a quick snapshot here of where are we right now. So I'm going to go ahead and take a quick snapshot of this right here. And then we're going to update our holdings. So we're going to go ahead. I'm going to snap these side by side right here. And Wait, that doesn't work on this, right? Let's do this. There we go. That's going to be better. Okay, so now we go over here. And all we need to do here is liquidate the holdings that we don't hold anymore. I already took a snapshot. We're at 1370 for the annual income right now, and 4670 713. Okay, so I took that snapshot. We're going to remove some holdings out of our portfolio. We removed ABM Industries, so we can go ahead and hit that delete. We kept Digital Realty Trust, but we removed Colgate. We removed Clorox. We removed Cisco. We removed Hormel Foods. We have removed Johnson & Johnson. We removed JP Morgan. We removed Merck. We have removed Pfizer. We removed, let's see here, Cisco Corp. And I believe we also removed WP Carey. Yeah, see, Waste Management and Siggy, so we removed WP Carey. Okay, so this is all the holdings that we have in here. This should now match up right here. We have Apple, Avi, Avery, Digital, Essex, IIPR, Lockheed, Lowe's, Main Street, Realty, Starbucks, Schwab, Siggy, and Waste Management. Okay, so all those holdings have been removed here. So now we can update our Schwab position here. We went from 1.58 shares to now, where's Schwab right here. We now have 277.90947 shares at a cost basis. We did increase our cost basis there. You can see we're from $71.88 to $73.56 right there. So that is going to take a bit of a beating, but we'll average into it. If it goes down, that's fine. We'll be averaging into it. So there we go. Our holdings should be up to date now. So if we take a look at the value, it's at 46,676. So 46,676 rounded down to the downside right there. Now our income here, let's go ahead and pull up our previous shot. So here's our previous shot. Let's go ahead and just do like this, and I can move this down. Okay, so here's the previous. We did have a bit more equity prior to the change, but because we sold out of some of those individual holdings and went into the ETF this past week had a bit more negative performance on it. You can see that our yield had been for the portfolio 2.93. The portfolio yield has increased to an average of 3.16. Our yield on cost had been 3.26. It is now sitting at 3.36. Our annual income going forward had been at 1,370 and is now moved up to 1,477. So we gained about $107 of annual income just by moving all those individual holdings over to SEHD. We gained $107 of annual income, so an extra $100 a year just within that that little movement there. Our beta portfolio moved up slightly, less than 10 points, so from 0.79 to 0.86. It's still under the 1 of the S&P 500, so our portfolio should still be fairly not as sloshy as the main index. It'll just perform either in line or better as far as safety goes. So that is the updated M1 Finance portfolio right there, moving to a new annual income of 1,477. Eventually, at a point, we do want to begin funding this account. We haven't funded this account at all here in 2023. There's no contributions right now. Right now, the majority of our capital is at Wealthfront, it's at Wealthfront at the moment, or at SoFi, getting 4.7% in APY. We obviously could have gained potentially some there in the market during the recent run-up, but we've just been kind of consolidating cash at the moment, looking for opportunity not only in the market in the stock market, but just in general, there's other opportunities out there that we could invest in. A lot of investors I've seen kind of moving to gold, silver, Bitcoin, buying up property that is just people are trying to get out of it quickly, so they're selling it off inexpensive. So there's definitely opportunities out there in the market. So we just finished covering number 4. If there's any sort of other information that you guys would like to see or have discussed here on the channel, let me know down in the comment section below. I will go into the Fidelity account in the upcoming videos, maybe do another Merrill Edge update. We've closed a VTI holding on Friday, closing our holding for VTI below 205, kind of locking that cash in. I don't think we've sold another call option on VTI. Actually, I think we did. But we'll do an updated video on Merrill as well. So there's other portfolios out there that are just kind of working in different ways. The M1 Finance portfolio right now is very passive. We kind of redid it to be a bit more passive with the automated investing turned on and everything. So it's one of the least active, most active accounts, right? It's doing a lot for us, but it doesn't have to have a lot done for it anymore. So that's the really good of it. So that is going to be it for this video, guys. If there's anything out there you guys would like to see discussed or talked about in the upcoming videos, let me know down in the comment section below. Otherwise, I would really appreciate if you go down below, subscribe, hit the thumbs up, and let me know, drop me a comment, say hello. I hope everyone is doing good out there and has had a great 2023. And I will see you guys in the next video. Bye-bye.